All right, let's kick off. All right, guys, this is the first podcast we've had with three of us. I think it's time, considering Simon, you've been on my podcast a couple of times. You've been on Rocco's. Rocco, you've been on mine. I've been on yours, Rocco. So I think the last person to start a podcast is going to be Simon. Now, I have been asking you to do it as well, so you're going to be next. But until then, we're just going to do it, three of us.
It's funny that Simon's YouTube channel is bigger than both of us, and he doesn't even have a podcast.
I actually was thinking that. I was like, if he was to start one pretty soon, I guarantee he just crushed
no, absolutely, because both our videos uploaded onto his channel gets more views than ours. What does that say?
It's the foundations.
Gents, being a Christmas special, just quickly from the top, I made a list last night. It's a list, two parts. One to help your search engine optimization for this episode, and also the other one to let us know what we can't talk about on this 1 hour Christmas special. Okay, so in no particular order, it's going from top to bottom. COVID, vaxxed, lockdown, Pfizer, variant, Robert Malone, Jeffrey Epstein, Ghislaine Maxwell, Sex Island, Hunter Biden's laptop, Jack Ma, science, Xi Jinping, Winnie the Pooh, Taiwan, Hong Kong, abortion and freedom.
You missed the World Health Organization.
Well, that's debatable. But those are the things we can't talk about, and we should be fine.
What about New World Order?
Okay, let me get my pen. That's a very good one.
That was pretty much everything that's happened last year. That's basically, like pretty much driven all the media, driven all the news.
I've just search engine optimization. This is going to be brilliant.
Awesome.
I can't wait. I'll see you guys later.
Yeah.
Cool. I think biggest thing to get into though is like all the shit's happened like markets last year. So obviously, like I'm fucking pretty much new to all this over the last couple of years. But Simon, from your perspective, like this has surely been one of the most craziest years, just in terms of how everything's influenced markets, how like younger people or random people are blowing accounts and doing things like this. Like, what's your take on like the whole thing?
Look, I mean, 2020 was a pretty extraordinary year. I mean, I don't think we've seen a year like. Sorry, 2021 was an extraordinary year. 2020 was extraordinary as well. But let's talk about this year. I don't think we've seen a year like this since 1999, where the market has just basically gone up in a straight line, very shallow pullbacks. And in fact, in 1999, we had some pretty decent pullbacks. You know, we had several kind of 10% whoopsies. I don't think we had more than a 5 or 6% pullback all year. So it was actually, even though it wasn't necessarily an easy market, because it always kind of looked extended and there was always kind of scary headlines, it was actually a pretty low volatility, very strongly trending market. That's looking at the indices. If you look at NYSE, which is the broadest index covering US stocks, barely 51% of the stocks in the NYSE are trading above their 200-day moving average.
Yep.
All right, so that's something that you don't expect to see when the major indices are within 2 or 3% of their all-time highs.
Very bad for stock picking. Because
unless you're buying Apple, Google, and Microsoft,
just buy 4 or 5 stocks, and as opposed to, because I mean everything else got pretty much slammed.
But if you buy Meta, you've kind of been a bit out of luck.
Yeah.
Well, Peloton was my favorite. My favorite story from COVID success story. Oh, they're talking about community, whatever, and then people realized they bought a watt bike strapped onto like an iPad. Peloton is down 70% year to date, and so where does that just hold? Where that argument doesn't carry weight anymore.
But isn't that just driven by the news as well, though? As in, like, Peloton was kind of fucked because of like everything that happened with their reactions towards all their tech issues and all things like that. So it's factors outside the control as well.
I think that it's a fundamental business problem issue. I mean, to me, Peloton is a lot like GoPro, only worse. Now, you think about GoPro, they used to make special cameras, right? You strap them on your helmet or whatever. Now, the thing with GoPro, your total addressable market is quite small. Like, how many people really want to video themselves snowboarding down a mountain or whatever? It's a fairly small market.
Super niche.
But very, very niche. But a GoPro costs $400. All right, so there's an upgrade cycle there. But like an iPhone, it's not that hard to add bells and whistles, add 4K, add Dolby Stereo, whatever, and get people to upgrade. You sink $2,500 on an exercise bike with an iPad strapped to it. Again, it's a pretty small addressable market. Your TAM is quite small. But what happens to your upgrade cycle? How often are people going to upgrade their Peloton? Not that often, I reckon.
No. And
So to me,
what's the
it's always like
community?
a GoPro, only worse.
Yeah, and what's the community? I look at stuff like ecosystem. I mean, we laugh about Apple and we make jokes. I'm not part of the iOS ecosystem, but if I look at their services are doing quite well. I think it's up 20% or something. So people going, yeah, iPhones, whatever. But like, what services am I getting with a GoPro? So fundamentally, like, what can I add? Where's the community? Where's my upgrades? What is, like Simon said.
It's just kind of a fixed piece of camera though. Like, that's why you just need to constantly evolve for it, because after 24 months it's out of date and you gotta pick it back up, you know?
Exactly.
Yeah. You touched on something cool there about community as well. So like, that community drive has just completely accelerated during the last year because of COVID or whatever. But like, why necessarily is that now? Because like, we're going back into like offices, we're going back into places. Like, a lot of those like investment firms are actually fully back in the office, yet all those drives online are all community driven, and pretty much every platform is.
High uptick in things like Discord, Reddit just wants to go public. I saw this morning. I wonder if they're going to short themselves. That's going to be interesting. Look, I think people are looking for something real. Okay, so something real would be something tangible, because we're all treading water, and so a community would give you that, right? It could give you a place of belonging. So Discord being the most popular one, sort of like Slack, where you join and there's like-minded people and you have conversations all day. And that's what's fueling, well, to me, that's what is fueling community, is like, where do I belong and where are all my like-minded people? I don't know. Simon, what do you think?
You said something there. People are looking for something real. We're going to have to come back to NFTs at some point and just just touch on that.
Okay.
But yeah, I mean, I think COVID has caused some habit changes, which, you know, may prove to be permanent. This kind of search for community, both online and offline, I think is one of them. And I mean, you talk about people going back to the office, Darren, but I'm sure you've both heard of, you know, what's being referred to as the Great Resignation. People are making fairly major and fairly different life choices than they were even a couple of years ago. And obviously COVID was the catalyst for this. And we've got the situation in the US now where, you know, job openings, the gap between job openings and people available to fill them are at all-time high.
Yeah, funny actually. Funny enough on that, my girlfriend's like American based, so her dad is like a local business based in America, and all of those employees can't be filled. All roles that are looking for, there's frequently shops that are looking for new hires and they can't fill them at the moment. So
Yeah.
it's a combination of, I don't really necessarily know what it was. I thought it was people taking the payment that they were getting from the government also doing their own work. So then there's huge vacancies, and then they're trying to say like, where is that kind of like demand, and how do you pull them back in? I think what's cool about that as well is you were saying about changing like dynamics. So obviously for you, you know, you've kids and you've different, you know, objectives, but even for myself, like a lot of my mates, including myself, don't even want to get back into an office and don't even want to go there. Now, I also kind of think as well, like, is that going to be detrimental to me longer term? It's so hard to understand, really, like, you know.
I don't think we've got enough data to. It's a hypothesis. You can hypothesize and you can make an assumption or probability, but we don't have data. There's nothing to go back and say we've been here and this was the most likely outcome. So that's how I look at those type of scenarios. Is it's a bit of a new territory. I mean, I would guess you'd go if you can take your dogs, most probably.
Yeah.
So I mean, like, but I mean, work from home is a tricky one, right? Because you have to balance career and family aspirations and
life.
And it's hard. Like, my kids could probably come busting through the door at any stage, but that is where it would probably up the video click-through rate of the session if they do. So that's where we are at the moment with work from home. Look, the big tech companies are actually buying offices and they're expanding. If you think that work from home is just going to be like this is the new normal? Forget about it. They've got other plans. They are actually expanding. I think 2022, 2023, we're going to see a movement to a hybrid model, but they're going to force people to go back. I mean, I can't see this being like just the standard.
And what's interesting there is like my mates, a lot of them like looking for different roles. They're looking in startups or like scale ups, whatever. And in the
Most
job,
probably crypto.
well,
Sorry.
even fintech or whatever space, but a lot of them specify that they're in office, and a lot of them specify then if it's like hybrid, it's like 1-2 days a week. And I actually had a conversation with someone recently who was saying that they wouldn't specify in the contract how many days you could work from home. So then you're just completely at like the mercy of the company, because they can say, fuck that, we want you in the office, and it's not in your contract that you can work from 1 or 2 days. So there's such a fine line. So it's kind of saying like, oh, it's not like you voluntarily decided to go there. It kind of leaked out, and after a while you just found yourself back in the same routine you were doing in 2019.
Talk about
I think it's different.
Yeah.
Because back in 2019, 2018, 2017, every millennial you spoke to either had a side hustle or was looking for one. And I think what we've seen is it's become more than a side hustle. People are really serious about becoming self-employed, becoming entrepreneurs, and it's older people are doing it as well now. You know, people in my generation are realizing that the social contract that used to exist between a corporate and their employees, you know, it's gone. And if you want to be master of your own destiny, becoming self-employed, figuring out a way to do that is a really good way to become master of your own destiny.
And when you're not at home as well, sorry, Rocco, when you're not at home, you can't necessarily like work on it essentially. So people are doing kind of both on the side. Like, you know, for myself, I could do 2 to 3 hours of podcasting because I'm working from home. I can do in the morning, do in the evening. But if I was going in and out of an office, man, cycling or getting the bus or whatever, there's no way I could balance something on the side. So it's nice to be able to have that luxury at home, just because you have more time and more space, you know. So it's a bigger driver for you to be able to build a platform or build a product or build a service, and then take that a step further then, because you have, like, as you said, Rocco, a bit of data behind it to say that this is going to be successful or whatever.
Yeah, but it's the realization that one income stream, that's dead, right? Because that, like Simon said, the social contract of work for this company for 10, 15, 20 years. Now we see people going 1 year, 1.5, jump. You know, recruiters used to say, oh, it shows loyalty. You need to stay at this company. Bullshit. Fuck that. There's like 1 year, 1.5, you jump, you move, you go. That's because that's how things are now. And people realize that, hey, I can't depend. I mean, we don't have one income stream. We have multiple income streams. And people are like, oh, how do you make your money, whatever. But it's because of that. If you don't realize that I can't just depend on one thing, because everyone wants you to be one thing, right? Because even like, oh, but why don't you make all your money off of trading? And my answer is, why don't you go fuck yourself? Because if I lose my eyes tomorrow, or I lose my whatever, and there's no passive or there's no other income streams, like what then? People won't care, but that's the thing. It's like there's a realization, there's an awakening of, hey, I need to pull multiple revenue streams, even if they're going to from different sources, but to one pot. And I'm talking about the family pot, and that's quite important.
Yeah, it's interesting. I think what's cool about that as well is that they don't need to be like big winners. So like you could offer like a long list of like products or services, and they could all just be small incremental. If you can consider it in terms of your salary, it can be, you know, sweet fuck all. But if you had, let's say, 2, 3, 4 different service offerings, that can, you know, add up quite substantially over the course of a month, over the course of a year, and then it's essentially like another salary then.
If you know something, right, and you're very good, not very knowledgeable, turn it into a course, put it on Gumroad for $10-15. You just drive sales with a simple, easy, free landing page through something like God. That's passive income, right? You're not doing anything, and even if you're making a couple of $100, it goes to a pot. So if you fall on hard times or something unexpected happens with, I mean, you don't have children, so you don't know this, but like if you have children, they are not children. Let's not. This is not even a conversation that I want to get into. Dogs are not children, right? But and then you have those reserve funds from something else. and that's the way it takes off the pressure.
Yeah, it's fucking hard though. It's really, really hard to build anything.
You know
that's
what's hard?
sustainable, you know what I mean?
Inflation. Because I spoke to someone yesterday in the US, and so on the back of like Powell's speech, where okay, so now inflation isn't transitory anymore. So they want to take it out of the dictionary, right, Simon? Is that
Pretty
they
much.
want to pretty much, right? So we don't recognize inflation, but it is there. It is very bad. There was a lady said cooking oil cost something like $8, and then over the course of a month, it's like $40 or something like that. She has a restaurant. That's real, okay, right? That's not like anecdotal, whatever. Those are real issues, and inflation is killing people on the ground because your salary isn't matching inflation. And what they are targeting, like 2%, 4%, whatever, times 3, man. That's real inflation. I've always said times 3. I don't really have data to prove it, but I'm just saying, and then you get real inflation. So if your money isn't growing at real inflation, then you're getting poorer every day. And this is sounding very much like a Bitcoin pitch, but it's not. It's just
your money or your income. Yeah, because if you're earning a salary or a wage that you can't scale, and you're reliant on somebody else's generosity to increase that for you, yeah, you're going to get royally screwed. And what we're seeing is a massive separation in the fortunes between those that own assets or can scale their income and those who are essentially wage slaves. And I know, Darren, you made the point that it is hard to scale a business. It's hard to make a side hustle profitable. But you know what's harder? Having to do it when you're faced with necessity. You've got to do these things when you don't have to. When you're relaxed, you're in a good frame of mind, and it's fun and it's enjoyable. You know, you find you lose your job one day, or your company goes bankrupt or whatever, and it becomes a necessity, and you haven't done it, you haven't put in the groundwork. Man, that's going to be tough.
So one of the guys that I follow is Terry Rice from Entrepreneur Magazine, and he talks about scarcity mindset. If you have scarcity mindset, it's impossible to think, like someone says, outside of the box, or where am I going to grow? So you need to, people don't build when they're in a good space. So when they get to that bad space, then I'm like, oh shit, how am I going to dig myself out of the hole? Instead of, when it's going good, then you need to really push.
And what was why that's so important, when I laughed as well, is because that was exactly my scenario. So like, lucky enough to be in a decent job for like my age, let's say, and then I always wanted to do something on the side though, not because like I kind of had to. So I've had like small businesses in the past, and they've all been failures, and they've all been terrible because I always rushed for them to be profitable or rushed to generate revenue. So it was kind of like I didn't have time on my hand, even though like I actually did. I should have been more patient. Whereas now it's the reverse. Now, spent over a year building a podcast. Now, podcast is not profitable, but that's not the point. The services around it are, because that's what's kind of built in parallel. But it was always due to the fact that I could take things at my own level. Now, just compare that to Eddie Whittingham, who was on my podcast a couple of weeks ago. He, this dude pretty much left his job as a police officer, would you believe? And then he was out on his own, and he was like, oh my God, like I need to make this profitable. So he built a business, no investment, from scratch, and he was always at the mercy of time. So that was his biggest constraint. Whereas if it's something on the side, you can, pivot, make sure it's correct. And then at that point, then look to make it actually a revenue stream.
Yeah, I agree. And I think the mindset that you're going to approach it with is going to be far more conducive to it working. Like you say, when you're racing against time, you've got that time pressure. I need to make money today. It's extremely hard to make it work.
What do you think yourself, Rocco? Like, what's been like the biggest thing for yourself over the last year? Because I know you've been doing something similar to myself.
What, kids? Well, in terms of what? Because I've got an 8-month-old now that's teething. Well, in terms of building, it's I've spent this whole year building an audience. That's what I wanted to do. It's called the Unicorn Network. High net worth individuals, not necessarily money, but engaged, active people like Simon. Simon was the first. Simon was where it started, because Simon reached out to me and said, hey, I like what you're doing. form a group, whatever. And then from Simon, that's where the SGM podcast started. I engaged with you, people like, I've met fantastic people. Alfonso Picatello, Aisha Tariq. These are amazing people. And what I found is that when you have those people in your network, they are more valuable than money. Because Vilna put something up yesterday, $1 million or 24 hours with Elon Musk. And she said 24 hours with Elon Musk and just get him to tweet my shitcoins and I'll retire. It's that mindset of people are important. And it actually comes from a podcast I did with Zoe Hartsfield, where she said, like, curiosity is your friend. And if you make people curious about what you're doing, that's where the discovery calls come from. That's where these opportunities come from. People think I need to go out and sell myself. No, you don't sell yourself. You make it easy for people to find you, and then you make it enjoyable for them to stay. And then they're like, hey, what do you do? Like, whatever. And then that becomes those offline discovery conversations. And then, it could be consulting, it could be selling a service, it could be anything, it could be a partnership. I've started things with people that were on the podcast now that you're not even promoting it because you don't need to. And I believe promoting others is the new social currency. So I would rather promote other people, and then that's the real trickle down. Trickle down doesn't work, but that for me is the trickle down that works, is promoting other people, and then like good karma coming back to you. That's what I've been focusing on this year.
The biggest driver to that as well, I think, over the last 2 years is showing that like it's actually the individual that can grow and can build something much more substantially than a brand. Perfect example is that, like, let's say if you were to launch, let's just use an example of like a clothing line. When it's the name on itself, no one really resonates with, no one can get behind. When it's the person behind it as a result, though, it just grows so substantially. I think that was obvious. Like, that's an obvious point to make, but like you only see it really in effect when it's happening yourself. I think that's what's really great is the fact that, Simon, like I'll sit down and listen to a webinar from you just because I like you and I like your stuff, but someone else could be providing the exact same material and I just wouldn't do it. And that's what's so interesting, is that like it's not necessarily. And what I always think as well is that you can probably get better information somewhere else, not from you now. That's not to you, but in general. So if you're listening to a podcast, right, you could probably get some information that's possibly better elsewhere, but you go to this individual or you go to this overall kind of personal brand because you like it, and that's something I really kind of learned this year more so than anything else.
Yeah, I think you both said a similar message in different ways. I really like what you said, Rocco. Make it easy for people to find you and make it pleasant for them to stay. I think that's gold.
Two podcasts I did. The first thing people that picked up, they said, "Wait, I want to show you something." They grabbed a book, and it was The Tao of Trading, the Simon's book, and it was personalized on the inside. And I'm like, "Yeah, I know him. Simon's my friend." And they're like, "What? Like, you speak to this person?" And then you realize, I feel good. I feel good about myself. This podcast is going to go well. I know people, and so that is the circle of building a network, and how a network is actually more profitable because people say it's that instant gratification, right? It's that I want this money now. Cool. What are you going to do with it? Like, I see these people, novice traders or investors, whatever. They say, oh, I want to be a hedge fund manager. I want to do this, whatever. But you can't even manage $1,000. How are you going to manage 10 million? It's like, it's with everything in life. Oh, I want 10,000 followers. You can't even handle 10. Like there's a scale here where you need to start and then you need to grow into it.
Good point. People always say they want more, but they're not necessarily prepared for what more entails. You want more business. It's going to mean more customers. It's going to mean more difficult customers. It's going to mean more work. It's going to mean more responsibility. And, wanting more, there's always something on the back end of that. And a lot of people are not necessarily mindful of it or prepared for it.
I've really learned that recently because, like, when I'm doing like a service base where like I'm offering people, if it's a career help or CV checking and whatnot, I was always like, like building up like 5 people a month, whatever, be great. After realizing that getting up to like 3-4 people in a month, it's really intense, because the second money is involved, there's a responsibility and there's a ownership on yourself to deliver a really high quality product.
Yeah.
And I always want to do that at first. But then when you're managing a role that's 40, 50, 60 hours a week, you're trying to find that time and you want to essentially deliver on your promises. And that's why for me, it was always like, get clients, get clients, get clients. I got them, and then I realized, fuck, there's all this, more work to do. You need to build out, you need to provide them, material in advance. You need to prepare in advance. You need to stay in contact with them. And I remember, Simon, when I was speaking to you about your course, you were saying that you're always kind of, you want people to be doing it. So you were following up with messages and whatnot and sending out emails. And that's kind of something that I was kind of thinking of as well, is that it's all the stuff around it that's the service or the product. And you don't realize it until you're in the middle of it, do you?
That's right. But when it's your name and your reputation and your brand on the line, yeah, I mean, you really want people to have the best experience you can possibly deliver.
So the great thing for me is, but this brand thing, it's in the recognition, and it brings an authenticity and an honesty and a transparency. It's like, I know what Darren is about. I know what Simon is about. I've never met you in real life, in physical, but when I go and look at the content that you push out, I can get a sense of, okay, I know you are relatable. So people are trying to make people like them, right? Most people don't even like themselves. But if I can relate to you, like, Simon put up this brilliant post this morning about his little boy started running and whatever. That was so cute, because I could relate. Mine is like more squidgy. Is now crawling, but that makes us relatable to each other. So it makes me want to go and check out other stuff that he's doing. And it also makes me want to go and connect with his network, which is also important. There's we spoke about it yesterday, and Andrew, and I can't pronounce his surname, but he's doing time science and things like that. So I want to delve deeper into his network. So there's cross networking, and I know, Darren, you're very hot on that, the whole cross networking thing.
Yeah, I just think that there's usually the people around your network or the people around Simon's network are going to be people that I'm also share a lot of similarities with, and that's the thing. Like, doesn't matter like age demographic or background or industry you're working in, you often find that people have a lot of similarities to you. And that's why I'm always saying to you, Simon, about growing a podcast, because I know for a fact like you'd meet all these different people. And the biggest thing for me was that like I started a podcast in particular because I hated what I was doing when I was in consulting. I just hated it. It was really slow. I felt like I was the same as everybody else. Not to say that I'm like a snowflake, but I'm saying that I was always caught in the middle. But then when I did something like that, then everyone was like, I feel the exact same way. Everyone was like, I'm a young person, worked hard, and now I feel like I'm stuck. And then that's where there was a change in kind of dynamic like that. And that's why for me, then I was like, really everything that I'm learning, I'd love to be able to help other people in some way in a couple of years or whatever, but figure out what that kind of thing is. And Rocco, to your point there about like Simon's like post. So I think all this stuff is like evolutionary. Like you start off and everything sucks at first. But I think I may have said this as well to you before, but I remember when I started something, I remember knowing that I was shit at it, like really shit. Now I remember like if you look back at my old episode stuff that I knew was really, really broken, but I knew I could get better at it. And that was the biggest thing for me, was the fact that I knew I could figure it out. I knew just, time under the mic, practicing with sound engineering, just figuring out these different things, I could get better at it, and that's one thing that I want to take into like my next project that I'm going to be working on or anything, is the fact that at first when you're at the early stages, it could be writing posts on LinkedIn, whatever, they're going to be shit. If you can kind of detach your mind from that and then be able to actively work on something, 6-12 months or whatever it might take.
You just resonated so hard, because I think me and Simon can really say that people, because we see a lot of people that want to start trading. I think he sees more options. We see more CFD guys, but it's that I want to do everything right now from the start. And people don't realize, hey, you're going to suck. Hey, you're going to blow accounts. And it's really hard sell, because they will rather go to the people that say, oh, you're going to win 100%, you're going to make this amount of money, whatever, instead of the person saying, hey, you might lose this and it might take this long, whatever, that the sort of expectation management. And that's what you said. It's so important to work with a plan and to know, hey, I might suck, but if I do this every day and I follow the plan, I will get better. I will like get where I need to be. And that's super important message.
I mean,
Yeah.
we suck at almost everything when we first start doing it, whatever it is. And it just takes practice, whether it's Brazilian jiu-jitsu or flower arranging, or trading or whatever. You're going to go through a period of suckage. But to look at it on the bright side, it's how often when you're an adult do you get to witness and experience the joy of exponential improvement. You only really get that when you suck at something. So that's kind of the optimistic way to look at it.
And I always go into those scenarios with like a learner's mentality. Like I remember when I first joined Revolut, so like I don't have a finance background, like I have a software engineering background. I'm also a shit developer, by the way, just as another side note. But I remember one thing I always said to people was that like, look guys, I don't have a finance background, but I'm really interested in this and I'm like willing to learn. And I was always like asking the right questions. And I always like had that kind of like idea that like, oh, it's going to get better, whatever. And it's the same scenario now going into like after year one, moved completely into a different role, like completely barren, like starting from scratch again. And it's the same approach. I call it the intern effect. Like come into it with a decent attitude. Like I'm saying this from perspective of like not having like, like an ego being like, of course I know this and of course I know that. Just taking it very simple because, so I mean, you compared it to jiu-jitsu and that was the same with me with boxing. So I picked up boxing quite late. I was like 18, 19. And it was the same principle.
I was 32.
No way.
Wow.
And you're black belt?
No, when I picked up boxing.
Oh, right. I thought you picked up jiu-jitsu. I was like, Jesus Christ, you're a black belt already. But it was the same. It's the same concept though. It was the fact that like it's just that kind of like learner's mentality and that things will get better.
Yeah.
Over time. All right, Rocco. I know you want to get into the metaverse.
Yeah, I want to quickly go back to my first LinkedIn post of this year. I feel the one thing that we do very well is we put our content and we don't delete posts. This is our standpoint. If we're wrong, we're wrong. If we're right, we're right. So let's say we were right, Simon. We were said 2021 bullish, fucking bullish. Everyone went, no, fuck you, whatever. And now I feel we can go around and say, yeah, we told you so. If we were wrong,
Not that we would have.
No, well, I mean, if we were wrong, we would have gotten it. So you need to take your wins where you can, because looking from a technical perspective, I just saw that the inside candle is always the easiest one, especially on the yearly time frame. You can see it bullish. You don't even have to worry about it. The second one, this is where it gets tricky now, right? Because the second one is maybe retrace, and then you have to see because we're not sure. I don't have enough data. I don't have enough time. Long term, still everything looks bullish. What is interesting is we are moving at a very, very fast pace, exponentially faster if I look at things. Yesterday, FOMC meeting, Powell talked 3 dot rate hike, and what is halving of taper? Am I right?
Yep, or doubling. Having the time frame,
Having the time frame, yes.
So
from nothing saying no, this is 2023 till no, this is now. So we're moving at a very fast exponential pace, and things are changing very often. So we have to. Simon used that phrase, a nimble mindset, right? You have to have that nimble mindset of being knowing when to short, knowing when to long, and I think that's a very good approach to take going into next year. Is just like learn how to short, because somehow people have this thing in their head, or they got taught, and I think Reddit's got a big influence on this. You put money into something, it grows, and I make money. Mm-hmm. But they're not learning that the market goes both ways, because when the market goes down, stocks go on sale, or buy the dip, or hold, or, those are the narratives. But I'm like, that was a big move down. You could have profited from that. But and so I mean, that's just my take from this year. Is it's fascinating. Like but I love the retail trading and investing, because everything was so closed off for so long, and we looked at financial advisors as these demigods or people that know that going on, and meanwhile they don't have a fucking clue what's going on. They're just putting your money into an ETF. And now we're wise. We have armed with knowledge and we're sharing, and there's community. There's great people on Twitter. There's great people on LinkedIn. We want to go and learn from. But yeah, 2022 is going to be a very exciting year.
I think a big driver in that as well, I think what's going to be built out is social trading. So a lot of
Yes.
conversations with people recently, and I think social trading is going to be the big one for 2022 because I'm quoting with someone else here now and saying that, when platforms are built, a lot of trading platforms are built with trading first and then social second. But to make a really great social trading app, you need to start with the social media element first. And there's a couple of people that are trying to achieve this. And once that's achieved, I think you'll go from bringing the Twitter guys and LinkedIn guys to that centralized platform and having them exchange your thoughts. Now you have to kind of consider as well, like, what's the value add for them. So maybe there's some sort of like follow trade or some concept of like earning some sort of commission off their like diversified pie or whatever. But that I think eToro are doing something similar. I'm not too sure how that's
eToro is
worked.
sort of the
Power and influence, Darren. You know
Yeah.
what? Because there's people on Twitter that have 15, 20,000 followers and they get a kick out of it, right? I'm not saying that they're good at what they do. People like the Substacks and stuff are good, but they don't get money from it. But there's a power and an influence that comes with having that many followers. And I don't think it would be too difficult to persuade them to go over and bring the people along and say, hey, because what can't you buy? You can't buy power. You can make money from markets, but if you're not like a politician, you don't know the right people, that you can't buy power. And saying to that person, hey, come along, here's an audience, here's a base, whatever, we'll pay. Well, we'll throw in a couple of bucks. But yeah, those people the voices are becoming loud, and it's becoming really like an interesting space.
What's your thoughts, Simon?
I think that it's not going away, but I also think it's potentially, it's early days. It's the Wild West, and the fact is, you look at Twitter. I mean, there's a lot of fuckery going on Twitter, right? People pumping and dumping shit coins, and I'm not just talking about the CEO of Tesla here. I mean, there are a lot of shills on Twitter, and it's knowing. I think if you're going to follow somebody, you've got to understand what they're doing and why they're doing it, so that you can take responsibility for the wins and the losses. If you don't understand what they're doing and why they're doing it, you're asking for trouble, in my opinion. So I think social investing, it's not going away. It's only going to get bigger, but I still think there's a really important education component to that as well.
That's the opportunity, 100% right there, is being able to educate investors in such a way that they'll see a return for it. So like if they're learning more about, and actually there's some other platforms that are doing that, like you learn about like crypto or whatever, and then they try to teach you, and then you get like a reward system at the end. But that's kind of the way it is because it's so fractional.
Yeah, but they need to be careful of gamification, because I've seen this type of where they try to make it fun and they try to make it entertaining, because people say education is boring, which inherently it is. But if you're trying to gamify it the whole time, then it becomes a game, and it's dangerous. But because then when you're betting with money and it's real money, and you don't you're not looking after those emotional aspects, right? So trading 90% emotion, 10% technical, and you're not harnessing and learning that mindset part. That's really dangerous, Darren.
It is. I agree 100%.
We see it with Robinhood. I mean, look at Robinhood. I said on your podcast, Robinhood would be a good call if, and my caveat was, they educate their users, and they didn't. They just signed more. There's no education, and look what happened. So I mean, you can build it, whatever, but if they're not focusing on the correct things, then I mean, it's not going to work.
Yeah, and I think a biggest thing that could influence this is, as you said, Simon, about like markets just going up and up. Like they're just being like at a rise. Might be a small correction on the way, but if something does, catastrophic happen, and if there's finally this bear market that everyone's been talking about and crash, that's when you'll really see people getting burnt and then maybe leaving and walking away. And maybe that could be the biggest threat to retail investing, is when people realize that it's really at the bottom, which kind of happened in crypto in 2017. Like you had people who all got
Wow.
burned, and then 2018,
Simon,
2019.
okay,
It's
so
what's
Simon,
tough.
what is that risk, that probability that we're talking about, like a decade of jaw burning, like in the market? Because
I mean, it's
a
real.
couple of yeah, it's real, right?
The thing is, right? Everything looks expensive now. Like, no, you've got a really, really tough case to argue that equity markets are cheap. All right, yeah, maybe they're cheap relative to bonds, but bonds are yielding 1.46% when inflation's running at 6.8%. The negative real yield on bonds is horrendous. So equities might look cheap compared to bonds, but bonds look ridiculously expensive. Property in any gateway city in the world is priced out of the hopes and dreams of any millennial, pretty much.
Mm-hmm.
So I
we
think
need
this
to
is
go
why
live in the metaverse.
we've seen people saying, well, I don't trust the stock market. It's rigged, and I hate the Fed, and I hate the way the system's run, and I'm not interested in buying a bond yielding 1.5%. And I can't afford a property. I might as well go and punt some crypto or some NFTs. And I think that's why we've seen a big rise in this, because people have been priced out of traditional markets.
Mm-hmm.
It's the
Or-
decentralized dream, the opium that is being smoked. Because my problem is, look at the concentration of crypto wealth, and look who's pushing it. I'm not saying they're trading and buy, you shouldn't, but look at the people who are actively pushing it, and look how much they control. And please make the decentralized argument again, because you can't. It's a construct, and it's a anecdotal, like saying it's the storage of value, it's digital gold, whatever. Those are all anecdotal. It is because people feel disenfranchised with politics, with economy, with their lives, and saying enough is enough. And what happens to those people? There's a Pied Piper who comes along and says, here's the out that you've been looking for. We're going to call it Web3. It's you're all going to live in the metaverse. You are going to put on these VR goggles, and everything is fine. There's no rules. There's no rule of law. You can be yourself. You can own everything that you want. You can own your property. You can. Darren, that's very nice in theory, but I'm generally a positive and an optimist. I want to see it first, because my fear is that there's two ways. Either I'm in full support if this is true decentralization, but like Simon said, if this is a centralization of power from big tech, we're even more fucked than we are now.
And I think that's the biggest debate at the moment. And I forget his name, but the CEO of Sandbox, so Benoit, I don't know his surname, he's a French guy.
Yeah,
his
he's
biggest argument is he's a weird dude, but he's really interesting though. He was saying that, look, we have the concept of centralization where you have Meta trying to take all this influence and take up the market, whereas he's exclusively working a decentralized approach and trying to give that apart like authority to people. But then at the same vein, like, he owns it then, no? Like, he built a platform and he owns it. So like, this is where it draws the line, is in who actually has the authority.
That's Simon's problem with NFTs.
Yeah.
One of them. You want to speak about NFTs, Simon?
Well, yeah, let's start off. Let's talk about the pyramid of awareness on NFTs, all right? Because there's a whole bunch of people who never heard of them, don't know what they are. And then you got sort of the next layer up the pyramid. There's a bunch of people that they know it stands for non-fungible token, and it's got something to do with the blockchain. And I love how people talk about the blockchain as if there's only one. And then you sort of a little bit further up the pyramid, you got people who they know it stands for non-fungible token, and they've heard about JPEGs being, changing hands and being traded for ridiculous sums of money, and that they think that that's what NFTs are all about. Then you got sort of a layer up, which is where I like to kind of think of myself as being just genuinely curious about where this technology could be useful. And I wonder, forget about the trading JPEGs. That really
No,
is
the
just kind of
utility,
published.
the utility aspect.
Yeah, I mean,
Yeah.
could NFTs be used to combat fake news? Could NFTs be used to combat digital deepfakes? That type of thing. You know, these are things that I wonder about, and I do think there could be some serious utility for the technology. And then, of course, at the top of the pyramid, you've got people who actually understand it. They're making money from it. They're creating in this space, and I'm very far from that. But I am, very curious and open-minded about the technology.
It seems to be product related at the moment. Like those people that are making money from it are the likes of like the luxury brands that are trying to create like a digital experience of literal shoes and dresses. And there's one argument that was trying to be like stood up within this like luxury like industry niche was the fact that if you buy something that's really expensive, like specifically kind of females, like say dresses or whatnot, they'll often leave them hang in the wardrobe forever and nobody sees them because they're too expensive to bring out. Whereas if you were to take that into a digital world, you could have an online collection and then display it to all your friends, and not only display it to your friends, also sell it to someone then in return. So that's their narrative that they're pushing, is the fact that you're able to come in and interchange it.
But we've spoken about this. This isn't new. Nothing is new. We traded when you were little. You traded trump cards or Pokemon cards or whatever. This is a digitalization of that, and it's playing on people's. That like you buy stuff that you don't need to impress people that you don't even know, that type of thing. It's like I spoke to a lady the other day, and she said it makes her feel something when she buys NFTs and it puts in her wallet. And I mean, everyone, I guess, wants to feel something, that because you spoke about brands versus people. I like to believe that through our content that we push out, we make people feel something, as opposed to a brand that is being disingenuous and putting a message out there and people going, that's a bit cringy, whatever. So it's that hunt for something that makes me feel something, and that's the human psychology. Is it post-COVID? I'm not sure. I think it was going on even before. I think COVID was accelerate. It's accelerated this human emotion of wanting to feel something because life is perceived as being so shit. It's that escapism, and that's where, for me, the metaverse fits into gaming culture. It fits into, okay, don't take this the wrong way, but drug usage in terms of, and it's not like hardcore stuff, but maybe like weed or psychedelics. And I like the whole Joe Rogan movement of taking psychedelics and having, or DMT, this out of body experience. It's because I look around in my life and I haven't maybe achieved what I wanted, or the government is like on my case and they're telling me I can't do this and this. So I want to escape. So what do? I go into a game where I've got an avatar, I'm someone else. There's a chat room and I play the whole day. I put on VR goggles. I go into a space where, and the same with, I go and I use some substance and then I have this out of body experience. It's, to me, escapism, trying to feel something. I don't know if that makes sense.
Yeah, it does. And I think that, if you want a more dystopian view on where the metaverse, what its purpose could be.
Yes, please.
I mean, there's, a lot has been talked about the role that AI and automation will have in producing a significant class of people who are basically unemployable. And so this is where the idea of UBI, universal basic income, comes about. And a lot of billionaires are very, very supportive of this concept of you pay everybody basically a subsistence wage. But then you've got, hundreds of millions, billions of people who are unemployed. They're surviving on UBI. They've kind of got no purpose in life. Well, what are they going to do? How are they going to fill their day? Roll in the metaverse. And the UBI will pay for their access and, put them in a one-bed shoebox apartment. It's all they need because they're plugged into the metaverse all day. And, who knows, maybe one day they like it so much they get a socket implanted in the back of their head and they can just get plugged into it, 24/7.
They may also be able to work in that space. able
Elon
to
is doing
provide
it,
some
right?
service.
So Neuralink is very closely going that way, where chip sits into your brain. I mean, it's not a far step. It's we're talking about the singularity and the blending of humans and robots, but we're already there. We all got bionics and modern medicine, so it's not a far stretch to say Simon's dystopian future could be a reality. Maybe not in our lifetime, but maybe in our children's. I connected with two ladies yesterday on LinkedIn, and let me just paraphrase before I go into this story. People are doing amazing stuff in this space, and I applaud anyone that's making money out of it, because I'm a capitalist and I believe in capitalism. So what they are doing in the Silicon Valley, so they saw a gap. They created metabots. So a metabot is a avatar that is on AI, like what they call decentralized AI. So I mean, I'll talk to them later and we'll get through it. But so when you go into the metaverse, it's it's not real people that you are interfacing with. You get me?
Like NPCs.
Yeah, and then you can buy the NFT for that metabot. So you will have your own virtual companion. It is linking to what Simon says about what is my purpose in life. It is, if I'm occupied, how do we occupy these people? So and that's it. Okay, so I don't even need to give him a real person to speak to. I can give him
An AI
version, AI version, because the more you talk with that metabot, it will learn your phrases and mannerisms and characteristics, and it will pump you things that you like. It was just like dopamine. Oh, how are you? Da, 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 whatever. And so you would want to talk to that thing because it's not human. There is a scary dynamic that's coming up where we are humanizing a lot of this. To me, it's not human. We are human, and we need to be careful of humanizing things of that nature, because it's
all about
affects
it's all about that human experience, so where they try present that to you. So remember we talked on your podcast about how I was saying the first leader in this will be like porn in the sex industry, because just like Web 2.0, the number one like entry point for credit cards online was through porn, being able to buy things online, and that's what led the way to that. And again, that experience is obviously not real. It's not like reality. It's not what happens in real life, just like OnlyFans, just like all these other platforms. But then you're taking that into a complete artificial world where you're getting all the demands you wanted at a cheaper rate, and it just preys on the vulnerable, it preys on the people that are most susceptible to this stuff, just like the drugs. Just when you brought it right back to the start of the argument about how it brings into that element of people that want it the most. It's not going to affect yourself or Simon, who have a family and you're working hard and whatnot. It's people that literally have no other alternative, and it's just cheaper. It's a cheaper access.
So look at the amount of money that they are pouring into things that tech, haptic feedback. Why are we doing that? Why are we pouring, or why are they pouring so much money into that technology? It's because of the feel. I need to feel what's going on, whatever. And even if we don't want to go there, just the amount of money, money follows the path of least resistance, right? If there's enough money going into a space. So also we need to check our own bias and says, because you get these people and saying, this is not going to happen because of whatever. But even if you don't like it, it's not necessarily not to say it's not going to happen. Just the sheer amount of money going into that space.
It's going to happen. It
is happening.
And it's likely to be a highly pleasurable, highly addictive experience as well.
Highly pleasurable.
100%.
I'm just thinking about haptic feedback.
Right. So where this ultimately ends is all of the people who plug into the metaverse actually don't end up reproducing in the physical world because they're so busy doing that in the metaverse.
So you're seeing those growth rates come down even more, or the birth
population growth,
population growth.
Just in Japan,
Wow.
that was the biggest thing. with Japan,
This
wasn't
Yeah, well, this took a really dark turn very, very quickly.
it?
Was very positive and upper cherry, and then I mean we got this, but we wanted to get dystopian. So yeah, I mean
One thing I
if
would
you
say on
take-
this though is that yesterday I saw this guy called Chad West. He was in big marketing guy saying that crypto was always thought of a get rich quick scheme, and when they literally diversified into Web 3.0, all this became normal. NFTs became normal. The metaverse
but
became normal.
it's marketing.
It's marketing,
Marketing fixes almost everything. If I can
Everything.
make you believe, if I can make you believe it, then it becomes real to you. It's just how you frame it. If it's not obscure and if you bring it into mainstream, I mean, you've got the Staples Center being rebranded crypto.com. You've got they've really done. They took the marketing up from like just niche memes and sharing whatever to really like infiltrating culture. They look at what they've done with sports, NBA, NFL. They went straight to the heart of culture, and that's how you like transform. That's how you bring new things into a system. So you say, where's the culture, like you said with sex and whatever, and then you push it into there in a way that is, oh, this is acceptable. Okay, cool, let's go.
And it's entertaining. That's the biggest thing. It's just that
Oh yeah,
what people want, it's entertaining. And I actually had a conversation with a mate yesterday about that, about the fact that platforms that are just more entertaining than valuable grow more so than anything else.
TikTok.
You know,
Mm.
I'm
TikTok
honest.
and
I'll be honest. I'm lost on TikTok. I mean, I put clips of the SGM podcast onto TikTok. I can feel my IQ dropping, like
Same.
when I spend time on it, because I don't put videos up of myself dancing shirtless to Come On Eileen, because that would be offensive to Irish people. I think I got this pale skin to do
You
it.
just need to wear
but-
some braces or something.
Yeah, I must probably it's like swing a hammer or something. I'll get like 1 million views. But the thing is, like Darren, what you said, it's entertainment. People want to be entertained. 10, 15-second clips on Instagram or YouTube Shorts, whatever, they do very well. Like you'll take this podcast, you'll clip where Simon says something controversial, 400, 500,000 views. This whole thing, people might have it on in the background. That is the nature, but we can find ways of making this work as well, and saying we as content creators need to tailor our content, not conform. I didn't use the word conform. We need to tailor it to them, even if it gets less views, whatever. Don't make that it stops you from going onto TikTok just because you don't get 60, 70,000. Someone will click on it, someone will view it and say, I found value in this. And it's that is maybe something that we need to look at in the next year as well.
I'll give you a good example of that as well. So Joe Rogan, obviously, fucking everyone knows his YouTube page originally. That has 11 million subscribers, whereas Gordon
He's got
Ramsay,
a podcast or something, right?
he does, yeah. It was based off the SGM one. That was it.
It just eats elk meat and does DMT. That's all it does.
But basically, it was 11 million subscribers on YouTube, whereas Gordon Ramsay has like 20. And the reason why people were going to Gordon Ramsay is because he has that fucking entertainment factor where he's screaming and they're all short videos and they're 2-3 minutes. He obviously does some other good things and there's some decent videos up there. But I'm saying for the most part, people just wanted entertainment. Whereas if you look at the Joe Rogan YouTube page, you could learn everything there fucking is about subject matter X or Y. But people don't necessarily want that. People just want that entertainment. And then you tie that into where we're going in terms of metaverse and TikTok and short form content. Like, it's not necessarily the best platform that's going to win. It's just going to be the one that can capture the most eyes or whatever.
So that's
true.
Why,
I mean, you see a Joe Rogan video on YouTube. It might have 20 million views, and you think, shit, that's pretty good. Until you realize Lady Gaga is getting 1 billion views on a video.
That's why I started this podcast with my list. Hopefully it helped. But to that point where there's this thing about, okay, so the analogy is there's 2 videos, right? The one is we educate you about how to make money to buy a Lamborghini. And the other video is a billionaire driving a Lamborghini in the south of France. Which one gets the most views? obviously,
100%.
by a factor of 20,000. It is the billionaire south of France with a Lamborghini. So now you take that and say, am I going to stop posting content or what I deem is valuable educational content on Twitter, on LinkedIn, whatever, as Rocco? It's easy to give up. It's easy to give up and into that. But I still believe that we should continue and forge ahead with, because valuetainment, someone said to me, like waste at the start of the year, valuetainment isn't education. I don't care what you say, because if you just make it fun and entertaining and there's no substance, there's no core like fundamentals that you're teaching, you're just making it fun and entertaining, you're actually not learning anything. Because if you're going into the practice in the real world, now I have to go and do that. What are you going to do? So I will continue keeping those posts, but just maybe throw a meme into it here and there every now and then.
Yeah, making it say
Sounds
personal.
like a plan.
All right, guys, I want to wrap it up here. Before we do, what's one thing you're looking forward to next year the most?
Borders reopening.
Borders reopening. I'm looking forward to family, and a sense of purpose. So because I think these things go into decades, right? So when did COVID? We are now 2-3 years into this, right? We've got Omicron, which is more aggressive, but it's now becoming clearer that it's more like a flu type of strain, which is good because don't want like normal, but just so like someone said, things opening up and we can travel again and come and see each other without jumping through those loopholes. Hoops. Yeah, jumping through hoops.
Yeah, couldn't agree more. I'm going to stop recording now, guys, but thank you very much again.